It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Yes, it is the Real Estate Breakfast, your daily briefing on Australian real estate. We also look at the data, the trends, as well as the insights from Perth to Penrith and all markets in between. Very easy to understand information and straight to your preferred listening platform. And coming up, we've got a head-to-head, Brisbane versus Perth. Two suburbs. In Brisbane, we're going to look at Paddington, and in Perth at Scarborough this morning. Well, the weekend came and went, didn't it? Pretty fast. Hope you were successful if you were looking at property. Were you in the Melbourne property market looking at properties? Were there any discounts to be had? We'll be taking you to Melbourne in just a moment. It is Monday, August the 3rd. If you're celebrating, yes, your birthday, happy birthday, many happy returns. Tom Brady, turning 49 today, the 7-time Super Bowl champion. Martin Sheen, this is the father of Charlie Sheen. He is turning 86. Of course, the actor known for that unbelievable film, Apocalypse Now. He went from that to many years later starring in The West Wing. And I see that it was on this day, back in 2020, global COVID-19 vaccine trials continue accelerating across multiple countries. That does seem like a long time ago. So many things have happened since 2020, including recent market data showing that Melbourne is still remaining Australia's softest capital city housing market. Values, they continue to edge lower, with buyer confidence remaining cautious. Melbourne dwelling values remain below their previous peak, making it the only major capital city still working through this prolonged correction. In fact, one of Hawthorn's landmark heritage homes has just been relisted with a revised price guide. The listing highlights how even prestige vendors in Melbourne are adapting their pricing strategies to suit today's more measured Melbourne market. So off the back of that, why don't we take you to Melbourne and catch up with Paul Tzamalis from the auction company there. And Paul, welcome back to the Real Estate Breakfast this morning. Yeah, 2020, the global COVID-19 vaccine trials. Do you feel like that's such a long time ago?
It seems like a long time ago, Craig, and I tell you what, back in 2020, they were telling us not to auction due to COVID regime changes, and now they're putting a bill through the parliament here to stop us auctioning as well with transparent reserves. So it feels like we're going back in time.
Gee, if we only knew going into COVID what we know now, we'd all be billionaires probably.
We would, but it also tells us a fun fact that when we're in the moment and when we're seeing things with all negativity, eventually we come out of the back end of it and life continues. So that's the one thing we should have learnt from it all.
Quite interesting, the fact that whilst you're in this softer market, as I highlighted, one of Hawthorn's landmark heritage homes being relisted, which is highlighting that even prestige vendors, they are sort of meeting the market where it is, which has probably sort of moved on from a couple of months ago, 3-4 months ago, where they were stuck on yesterday's pricing.
Yeah, and I think over time itself gives people an understanding that what you want may not necessarily be possible, and that the price that you're going to accept now could have been what you could have accepted 6 to 12 months ago, but now reality sets in and the objective and the goal far outweighs the extra money.
Do you think that part of the problem here is the obstacle of the property market in this cycle is that people are overanalyzing the market? What do you think?
Yeah, human nature is we always want to get it right. We want to assess every risk. We want to make sure that we make the most amount of money. But by the time we do that, the opportunity passes us by. So, it's a scary decision to buy real estate. I'm not saying it's easy for 1 second, but undoubtedly, based on the statistics that you've just given everyone before about where Melbourne's at, if you want to buy, arguably there's less competition than ever before. So get yourself into a position, find the house or the property that you're looking to invest in, and just go and make an offer and buy it.
Yeah, I was talking last week to Veronica Morgan, and she raised a really interesting point. In softer markets, when people should be buying, for whatever reason, they say, oh no, I'm not going to buy right now. I'm just going to wait for the price to come down even further.
Yeah, and I mean, it wasn't that long ago, Craig, that we were saying, or we were hearing the market or people saying, I can't buy a home because it's too competitive. You know, the argument was there's too much competition. Now, when there's very little competition, the same people are arguing, I'm not going to buy yet. I think it's going to get cheaper. Well, if you keep playing that game, you're still going to be upset, and 10 or 20 years will pass you by and you still haven't bought something.
Yeah, we sort of raised this, people, when is the bottom of the market? Nobody knows when the bottom of the market is, but people think they do know. Some people are so convinced they know when the bottom of the market is, they even give you the month. But this is really fanciful thinking. And I'll even quote you from the line in the movie The Castle, you're dreaming, mate. So, Paul, there's a lot of dreamers out there.
There's nothing wrong with dreaming and there's nothing wrong with having a vision, but I just think largely most people are buying real estate to call it home. Like the castle, people are buying their castles. So whether you buy right at the bottom or just before it or just after it, your castle is, in most cases, your forever home. So who cares whether you miss it by a few thousand, $10,000 or $20,000 over the long run? History has always suggested to us that you'll make it back. And, even if you make a little bit, it's the memories and the enjoyment of being in that house that far outweighs the dollar value.
It does really amaze me that people miss out on buying their dream property, that is their forever property, and they're not prepared to slap an extra $5,000 on it, which may have secured that property. I don't really understand their way of thinking.
I think it's easy to say that, Craig. It seems small, but, for a lot of people, it's still a lot of money, particularly given the fact that it's not just the extra headline amount. I mean, in this market right now, people have to contemplate that if you're spending $600,000 up to $1 million, if not more, you've also got to consider you've got to service the interest on that home. So I think due consideration needs to be made about, well, how much is it going to cost me to stay in it and hold it? But to your point, trying to get it for the best price, really over a 20-year period, 5 or 10,000 to miss the home that you really wanted doesn't make sense in the bigger picture and the bigger scheme of things.
Yep, that is my point exactly. We are talking to Paul this morning from Melbourne. We're back after this.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, buyer-vendor sentiment. It's your weekday real estate breakfast with news, interviews and predictions every morning on the Real Estate Podcast.
Hey, got a great head-to-head here, Brisbane versus Perth. So first off, let's have a look at the Brisbane suburb of Paddington. Median house price $2.3 and change million. Median unit price just over $1 million. The 12-month house growth 17.2%. The 12-month unit growth, gee, look at that, 22.3%. House rental yield 2.6%. And the unit rental yield 3.5%. Right, let's have a look in the Perth suburb of Scarborough. The median house price there, $1.472 million. The median unit price, $843,000. The 12-month house growth, 13.3%. 12-month unit growth, 13.7%. And in Scarborough in WA, the house rental yield is at 3.5% and the unit rental yield at 4.5%. It is a Real Estate Monday. We have got Paul in Melbourne joining us. Let's go to your number one tip for buyers traversing through this current property market cycle in Melbourne. What would you suggest for buyers right now?
The caveat is if you're ready to go, finance ready, and you want to buy, my number one tip is act. Don't wait. Go to auction, bid, put yourself in the position to negotiate, or if it's for sale, make an offer, sign a contract and put it in the agent's hands or under the vendor's nose, because no one's on the market right now to sort of value their property. They're out there to sell. So go out there and actually act.
And what about your number one tip for vendors?
My number one tip for vendors is if you've got one bird in the hand, I don't see where the second one's coming from at the moment. Time may necessarily not work in your favour. So give due consideration to something that is sitting in front of you. I'm not saying to take the first offer, but I'm certainly saying give due consideration because we don't have the luxury of having a second or a third person sitting behind it at the moment.
And as far as this market is concerned, we have been here before, haven't we? It's not like this is, this is completely new. We've never experienced this softer market. Is it a case that people then should be focusing more on the future?
I definitely think that's the case, Craig. We have to look past what we're going through at the moment, and I understand it's difficult. I'm a resident, I'm a member of Victoria. I've got a business here in Victoria. The sound and the noise in media and around us has been negative for a very long time, but governments change, consumer confidence changes, world issues change as well, and I think it's all come at once, but it's still a great place to live. There's great real estate down here. There's great lifestyle, and I just ask people to make decisions on the long term, not the short term.
We were talking the other morning just about how much media with real estate is out there now. There's a lot of negativity coming from all forms of different media. We're talking podcasts. You don't need a lot of money to set up a podcast. It is relatively cheap. Somebody's got a microphone. They can be quite powerful in what they're saying in their corner, and it can sort of mushroom with what people are saying, particularly negative comments. How do you sort of navigate through that with all of the vendors, the buyers that you're dealing with? Because they will come to you with certain anecdotal stories that they've heard asking for your opinion on.
I think that last word that you used, Craig, is fundamentally the issue. Largely we're listening to opinions. My personal journey day in, day out is trying to actually look for some statistical facts, something that's plausible that supports that opinion as opposed to just one person's view. And I'm saying this to vendors, buyers, and even to our clients, the real estate professionals at the moment, listening to Tim Lawless at Cotality about a month ago who, do this research. They look at the statistics. I mean, he made a fundamental fact. Yes, prices have softened because investors have largely stopped investing or pulled back for the time being, given the current tax measures in Victoria. But he said there's a limit to how much things drop purely based on supply and demand. There's just not enough stock to adequately service the amount of people that aspirationally want to buy or can buy in the state of Victoria. That's just a fundamental fact because of how many are being built. So the simple fact is, whilst they've slid back, it'll hit a bottom position because there's just nothing more to buy. And then eventually that demand will outweigh the supply. And then we start to get a bit of growth. So I look at that and I think to myself, if one of the heads of the greatest research businesses in Australia is looking at the facts and saying, yes, it's going to slide, but only so much, why would you gamble that now for the future of your home and risk that there's going to be this huge construction boom where that's not coming? That fundamentally can't happen because the cost to build, that's restrained, but people can certainly mop up what's on the market far quicker. And before you know it, we'll be sitting on this podcast once again talking about how competitive it is and people can't buy again because they just can't get into the market.
Yeah, so many things to think about in this current market. All right, Paul, we'll wrap it up there. Lots to think about and lots of takeaways there with your comments. Enjoy your Monday, enjoy your week, and thanks for coming on to the Real Estate Breakfast this morning.
Thank you, Craig. Have a great day.
Remember to follow us on any of the podcast platforms so you never miss a real estate podcast. You can follow us on Apple, Spotify, and Amazon. Know your property with us. We connect you to the best real estate information across Australia. The Real Estate Podcast.